I was ready. I wanted to scorch the earth to find this guy. I hated the fact that he was he was scamming people like that.
The military taught us discipline, it taught us leadership, but it never taught us how to really build wealth and income. This is the Active Duty Passive Income Podcast, and I'm your host, Mark-Ian Sitch, a United States Marine turned full-time real estate investor and educator. I'm bringing you the most successful military, veteran, and military spouse real estate investors, entrepreneurs, and industry experts to break down exactly how they did it, so you can too. Hello, ADPI. Hey, it's Mark-Ian Sitch again. Welcome to the ADPI podcast. Thank you again for tuning in. Today is yet another awesome episode. As you all know, we're so focused on this relaunch to make sure every single episode is hugely impactful. We got Trevor. Actually, Trevor, can you tell me, is it Mathena?
Mathena. It
Mathena.
happens all the time. Too many vowels.
I only have 4 letters in my last name and nobody can get it right. So I apologize. But hey, yeah. So we want to talk about what is near and dear to my heart today. And that is maintaining your asset, like just making sure you know how to take care of the physical structure that is setting so many military members like financially free or at least more independent, cushioning their transitions out of active duty, giving them opportunities they never thought possible. So you have an amazing experience. You have a lot of experience with your own investments, with your maintenance company, with management, and with even some, some kind of like almost horror stories that turned around and ended up being great stories. So I cannot wait to dive in. Trevor, if you could just start us off with like a little bit of an intro about you,
Sure thing.
military background, family background, where you're coming from, and then also maybe kind of bridge that into like why the heck you got into this real estate space.
Absolutely. Yep. So I started out, grew up in Indiana, really small town.
That's where I
Not
invest.
That's good. There's a lot of good markets in that area. So grew up there, and I got my start in the Navy really a little bit late. I was 22, so I'd already paid rent, had a car payment, had a job, all that good
An
stuff. So
adult.
I came in as like the grandpa almost. I think we had one or two people in their later 20s.
Oh, like
So
to boot camp, you were the
yes,
oldest in boot camp. Yeah, yeah, yeah. Okay.
exactly. So showed up in 2008 to the Navy boot camp. Spent about 7 years on active duty, and then 4 in the reserves. I had to get out for about 6 months and go into the reserves. They didn't want to give me a spot because they wanted me to stay.
Mhm.
But got to see the world, built a skill set in IT type of profession and everything like that. So it did help me with all the goals I wanted, and was able to come out the other side. And really, the reason I did even leave the reserves was because I had a full time job. We were building a family, my wife and I wanted to invest in real estate. So I knew one thing
Why?
had to leave
Like, did something
because
hit you over the head? Like, hey, real estate's the
actually,
thing?
so we moved to, I guess I could back up. We moved to the Austin, Texas area.
Okay.
We had never really been here. We came through on a trip whenever my wife graduated college, moved out to Singapore for the Navy, spent 3 years over in Singapore.
Oh my
And
gosh,
that
but
was
that was a
where
blast.
it was very good life experience, very interesting.
Wow.
Lots of good, lots of good times, lots of good travel experience and everything like that. So we knew we weren't going to be able to really come back to California, where I'd left from, San Diego area. Very expensive. We had friends buying, $400,000 houses, and they were shacks essentially. And so we knew building a family, it was going to be very hard to do that there. And we remembered coming through Austin in on a road trip. So we took the plunge, landed here, not really knowing anybody, and here we are 10 plus years later, loving it. Aren't going to ever leave. So with that, there's a
Fantastic.
lot of startup culture here. It's all about
Mhm.
the new unicorn app that's going to disrupt everything. So we're called the
Right.
Silicon Hills, actually. So I was talking to a friend, very entrepreneurial minded, and he said, hey, why, what kind of business do you want to do? I said, well, I have no clue about some app. I just know that I want to start a business. I know that I want to get out of W-2 9 to 5. He goes, well, invest in real estate. And I said, yeah, that's hilarious because I have so much money to buy all this real estate. He's like, you can get mortgages, you can do all kinds of different things. I was like, you're lying. And so, so right there, I said, okay, well, let me go check if he's lying. And that was the YouTube rabbit hole from then on.
Yeah.
Did a ton of research, took about 9 months. And that was when I first, took the plunge to make the first offer.
Okay, so interesting. You found real estate because you already knew you wanted to be an entrepreneur. Like
A-
something else was already like that light bulb already went off previously. There was a step prior to the real estate stuff where you're like, I know I want to have an uncapped income source. I want to
Absolutely.
build something as big as I want it to be. And basically not have anybody tell me what I can and cannot do, but ultimately financially and achieve what right. So that was already pre-built. Was there a book you read? Like how'd you go from like being in the Navy to that?
That I just always had it, except that it's kind of funny because I always had that in the back of my mind, but I also had the way I grew up, which was a lot of kind of limiting beliefs. Go get your
Mm,
job, stay there forever. Even with the military, you must retire, right? You must go do that, get your pension, do all the safe and very secure things, and
right.
really didn't do that. So one of the first jobs I got in Austin was with a small startup doing IT type work, software development and everything, and I got to watch it fully implode. But I still said, no, I still need to do something like this. I just got to take a few careful steps. We have family and things like that.
Was it because like you saw them implode, but it was like in it was on them? Like even when the implosion happened, it was
Absolutely.
them. It wasn't like somebody pulled the rug out from under their efforts. Like they knew that they failed, and then there's some comfort in knowing like, hey, like I was in control even if I messed up. Was that something that played? Like at least that's how my brain works. Like I would rather fail and then learn and then get better instead
Mhm.
of, oh wow, this person or that entity that I have no control over affected my success and I can't even learn from that other than maybe get negative and not trust others, you know?
Sure. I very much was treated like an employee with this company, like employee number one, if you will.
Oh, okay, okay.
And I saw a lot of just really terrible decisions and a little
Mm,
bit of a veil over some of the people that were involved. A little bit of
mhm.
this, you know, I'm not seeing what everybody else is seeing as far as this visionary genius type leader. I saw a lot of, showing
Mm,
up super late, being just completely bogged down and not really
I
doing the
see.
things that I would think that need to be done. So I got to learn a little bit about, what it takes to run a business. And then I also built confidence, like I actually probably know what I'm doing. If I start small enough, I can
I
do that
see. So you're looking at somebody who's this like proverbial visionary CEO and you're like, "Wait a second. If this dude can do it, I can definitely do it." Right? Meaning go
for,
out on your own, build something for yourself. Like
for sure.
it awesome. Okay. I love that. So that I wasn't expecting that, but that makes total sense. I love that. Okay. So here you are, you're entrepreneurially minded. Somebody like told you, "Hey, acquiring a bunch of debt and mortgages actually isn't that bad of an idea." And you went down a YouTube rabbit hole. Okay.
Exactly.
And what then? Like you got your first rental, you bought your first home. Like what happened then?
Yep. So first off, it was getting to be around COVID time, so things were going kind of haywire all over the place. Um, we
Okay.
had we had a property that we were living in here that was a little small. Now that we're about to have our third kid, so really the catalyst.
Congratulations.
What? Oh, thank you, thank you. He's 5 now, so it's time has been flying by. So
Oh, sorry.
um,
Yeah. Got it. Yes. Tracking.
Oh yeah, but so with that we were ready to purchase a bigger spot, and
Uh-huh.
we were able to get into a new build down here in the an Austin suburb, get into a new build, start the VA loan process, which we actually hadn't
Right.
done for the first one because I wasn't here yet. Just
Okay.
a little bit of that. So had the VA loan process, so we're going to be able to put 0% down, and we got the agreement signed right before things went really haywire with logistics. They were going to start raising the price of the house, the same builds, 10 grand a week after we had started it.
Right,
So
because
we
like
got
supply
in
chain just
exactly
yeah.
all that chaos. So we were able to get a good purchase price, and in the 6 months it took to build the house, our the value of our home that we were living in shot up, and we didn't have to sell it right away. We had the ability to hold it for a little bit just because of how the mortgages were structured and all that good stuff. So when we moved into the new house, we were able to sell the other one at a the I would call it like the first peak here in Austin.
Mhm,
They went up again. So we had all that money, which we didn't need to put down as a down payment, and
mhm.
so we were able to take almost all of that and start to invest. But since the Austin market took off so fast, it started to be not reasonable to purchase properties that you could get cash
Not a
for.
cash flow market,
Correct.
right?
So
Can I use that moment as a learning point? Like, you talked about selling your home. How long did you live in that first home?
we lived in it. We lived in it for 3 or 4 years.
Okay.
So
So
we did have that 2 years in there where we
okay,
didn't get the capital
so
gains
you're tracking
tax.
exactly what I because like we have listeners that are like everywhere from like, hey, I'm still not sure that real estate even makes sense. That's only for like I don't know Warren Buffett and Berkshire Hathaway to like people who are like they're real estate maximalists like myself. So I do want to make sure we cover that like because this was huge. I should have paid like I don't know, definitely five figures in taxes,
Oh yeah,
right? On my home that I sold. Now, I never did because um, I lived in it for a certain period of time. Now, typically it is 2 years, but for all of our listeners, I just want to, this is such a huge lesson. I don't want to gloss over it. If you buy a home and you live in it for 2 years, what that means is that for the next well, so it's 2 years within a 5 year period, right? So it
exactly.
can be broken up. You then do not have to pay capital gains taxes on any proceeds from the sale. That is huge. However, what's an even bigger deal, in my opinion, is that the military does not have to stick to the 2 year rule if you were forced to move. So there is this
Very good
thing
point.
called um, I think it's like it says like prorate. I can't remember, but oh, partial capital gains exclusion. Partial.
Mhm.
So I lived in my home for 18 months, not a full 24 months. And it literally like the 24-month rule has to be like to the day. Like these people, like they count, 180 days divided by 365. They literally count every day, right? So I lived in it for only 18 out of 24 months. But what that does is it doesn't mean, okay, now you can only exclude 3/4 of your capital gains liability. No, you exclude 3/4 of the max limit. And me and my spouse, uh we were able to exclude up to 500,000. So 3/4 of that is 375. We still made less than 375. It was like $172,000, but 100% of that $172,000 was not subject to capital gains taxes at all into our pocket. Like that is
That's
the
awesome.
power of like that is it's called like Eric Kupchurch calls it a live in flip, you know. But
Yep,
anyway, I just wanted to just highlight that because now you have basically tax free, really, just a nest egg that you're like it's a liquid, and you're like let's do stuff with it, right?
exactly. So with Austin being kind of shooting up as a crazy market, I was convinced to do BRRRRs, the buy, rehab, rent, refinance, repeat. I haven't had to say that in a while,
Yeah,
so I
I I,
think that
I
was the
always
right
have to
way.
think it through a million times. Yeah.
So I was very convinced I wanted to go that route,
Right,
and see
right,
how
right.
far I could stretch that money. But nothing was penciling out here in the Austin area, going through wholesalers, going through anybody off market, on market, whatever you were doing. So I remember hearing I'm assuming and pretty sure it was bigger pockets or something. Where do you have an advantage? Where do you have like an unfair advantage? And so my
Mhm.
dad lives in Toledo, Ohio. And
Ooh, okay.
of course, when you're listening to all these different podcasts on active duty passive income or on bigger pockets or wherever you're listening, a lot of times the Midwest markets come up. So I said, okay, well, let's
Yep.
start looking. And, I talked to my dad about it. I have boots on the ground. I have someone I could trust who's also very handy. said this could work out really
Nice.
well. So we kind of chatted about it, and he was on board for it. He loves just being busy and doing all kinds of
Projects. Dad
handiwork
projects,
projects,
right?
anything. Oh yeah. So so we went down the road, down the path, and I purchased my first burr. It was a older house, but it was in pretty good shape, just super outdated, probably 70s outdated.
Mhm.
So we did that for about 60 grand, and by the time we bird it out, we were renting it for 1100. It's more like 1350 now,
Wow.
and
2% rule
we
right there. What?
yes. So and this was 2020, about February 2020 was when I think we took took uh, took ownership of the asset.
That's awesome.
And,
I think that's, I mean, you would think with those type of prices, you're talking like, I don't know, 2009, right? But no, this was not that long ago. Actually, Toledo, Ohio is the first place where I looked at my first multifamily. Didn't acquire it, but it was like a 30 unit there.
oh,
I
nice.
think it was right by the lake. But anyway, so, okay. One thing I do need to highlight, because this is a big thing that I always foot stomp, and it's the boots on the ground aspect. So, which in your case was your unfair advantage. I
Yes.
have a lot of people ask me when they find out I'm in multifamily, like, "Oh, it's like, what markets do you invest in?" And I tell them, "Hey, it's northeast of Indianapolis, and it's just north of Atlanta, like the Marietta, Smyrna, whatever.
Oh,
Those are the two different places." It's not because necessarily I have some like hidden data on that being the best market, or this best secondary markets, right? Because they're outside of the big metro, the big metro areas. It's because I have the right people there. So like when
mhm.
I hear somebody say like I'll invest in anywhere in the southeast or anywhere in the Midwest, I'm like, holy cow, how? To me, that sounds exhausting. Every single new asset, I have to find new people I trust, go through thick and thin with them to really figure each other out on the loyalties and all that kind of stuff. To me, I'm like, no, like once I find my people, that I build around there. Because as long as it's not like, I don't know, like Detroit 15 years ago. Like as long as it's like in a market where the population growth is actually stable or going upwards, or it's next to, or it's a secondary market next to a primary market where everything is stable and growing, that's good enough for me because then I know if I have the right boots on the ground, I can also look into like the neighborhood, the streets, really know the
Exactly.
microeconomics. Like my 56 unit apartment complex, I literally do zero marketing because it's right next to the entrance or the exit on a highway that goes straight into Indianapolis, and on the corner of the main strip of all the like restaurants and businesses and like, Walmart, Best Buy, all that kind of stuff. So some of my tenants walk to work. So like I
There you
I
go.
don't need to even advertise my property. I don't have issues with like people wanting to stay there. I don't even have amenities and I'm renting it higher than some of the nicer ones with amenities. So, but that's because I have the best property manager. I self manage. I hired her directly under my company. And I mean, we manage that bad boy like it's a 3 bedroom, 2 bath, but she like, no marketing required. So I just love that because you found that in Toledo because your dad's there and he's handy. Like, what a
Yes.
bonus.
Exactly. So he helps bridge the gap a lot. So, like you said, my team, I have had the same realtor for every asset I've purchased or sold. I've had the same lender,
There you
except
go.
for a few little pieces, and they know my file in and out. They know what I'm looking for. They've helped shape that. And like you said about street to street, my realtor can tell me, literally street to street, which ones make more sense than the others, and everything like that. So I will tell you the only stumble, I cheaped out on my property management the first time around.
So did
And
I
that
twice.
I paid dearly. It took
Yeah.
2 years to stop paying for that mistake. So
Oh my gosh.
it just little bit, little cuts, a little bit of hey, I still have this little thing pending and everything. But now that I've had the property management company, that of course is a little more expensive, they have been night and day different. They are getting better rents. They're putting people in quickly. They are taking care of the assets. They're
Yeah.
maintaining them. They're doing all that. They're giving paperwork so that I understand what's going on, and it's just been such a good relationship there.
Yeah. I'm a huge proponent of either. Well, there's just different kinds of people. If you're really wanting to go big on it and you really want to do economy of scale and you're like you or somebody on your team is very systems and process oriented, I do think that potentially self managing, like base or building out your own property management arm, is the way to go. Or if you're just like, no, for these investments, you're going to find and vet in a very scrutinous way the best property manager, and you're okay with even maybe, you know, paying more than the other property managers, but it's done right. That actual, like, what feels like you're losing money long term is going to make you more money because you didn't cut corners, because they're doing things the right way. Like, so I love that you found an awesome, I mean, it's really a part of your team, right? The management company, the realtor,
Absolutely. Absolutely.
right?
Every last one of them.
Awesome. Awesome. Okay. So something else. Well, so my biggest lesson. So I did have to learn some really big lessons on about property managers. I had to fire two pretty like major companies for my apartment complex, and now I'm building out my own basically self management for my apartment complexes because
Excellent.
'cause I'm about to be under contract on another one, which is awesome. That's like 15 minutes away from the one I own with my parents. And I'm just going to build, like little mushrooms from out there. Again, that is a big lesson learned for me. But what has more recently been a big lesson learned, which I think you're going to be able to speak about a lot, is finding the right people to do the maintenance or the renovation.
Absolutely.
Like taking care of the physical structure of the building is so important. And I have my own COVID story. I bought a memory care facility in 2022, and that was right when COVID was kind of like sundowning, like the hype
Hmm.
and everything was kind of going downhill. But the problem was the resurgence of like the labor market. Like everybody all of a sudden got busy, and people were fighting over people to do good work, and or at least in Atlanta, and I wasn't able to find somebody that was interested in our bit, like in our work. And maybe I wasn't as experienced enough. I didn't have the right network in the area, all that kind of stuff added on to that. But I got a terrible contractor, terrible, right? And he delayed, well, he caused a domino effect. So his delay was about a year, but that caused me to then having to like redo or like get an increase on the loan and get another contractor
Oh man.
who also caused the delay because they screwed up the permitting and they had an internal dispute and one of his workers told the city, and that shut us down for 11 months. Like so many, like one mistake caused another big mistake, which caused another big mistake. And talk about lessons learned. I mean, like, I'm not kidding to everybody listening. Like, that is somewhere between a 1.5 to $2 million mistake right there on my part.
Oof.
Massive. The amount of equity I had to sell that was padding this situation. Thank God I was able to do that. But maintenance, you got to take care. Like, it not only affects maybe the physical structure, it also affects, like, if it's commercial, like a multifamily or in my case, a memory care facility, your ability to fill the beds or the units, or your ability to bring in revenue at the rate that you're supposed to. So anyway, talk to me about why, like, because you own a maintenance company, is that right?
Correct. So, another lesson you always hear about is if you're wanting to get out of your W 2 job, you may also have to look at getting some active income versus just passive
Active
income.
income. It's a huge lesson.
Absolutely. So, I still, I'll even preface this. I still have my W-2 regular job right now.
Yep.
Because my wife helps, she works full time in the Home Smiles, which is our property maintenance company. It is a franchise location. And, the reason we went with that was the founder, he is an investor himself. He's a lawyer. He saw
Mhm.
landlord liability cases all the time. And he decided to build this truck and hire two people to create to basically take this list of about 15 items and hand it over his addresses to his apartment complexes. And he said, hey, once a year you do these 15 things to my entire apartment complex, every unit, things like dryer vent cleaning, washing the windows, changing all the filters, flushing the water heaters, things of that nature, checking all of the smoke detectors and the carbon monoxide detectors, making sure all of that works because he saw it as a lawyer. He saw tons of lawsuits to landlords because of negligence. And then he also took a lot of hits on, if he didn't do the maintenance, he's going to replace his water heaters every 5 years instead of every 10 years. And those numbers add up at that scale. So
Right.
that's what really resonated with us when we were looking for businesses. I was looking to buy a business, but when you start looking at those books, it does get a little scary. So I got cold emailed around, actually, as a veteran, we get, not, I guess targeted is not the right word, but franchisors like veterans because of some of the things that we've experienced in the military. A lot of things around, standard operating procedures, understanding how to kind of work
You
through
follow
processes.
checklists.
Yes.
You're resilient. You're okay with being a follower and a leader, like all the things.
Exactly,
Yeah.
exactly. So he put 3 options in front of me just as a start, and Home Smiles was the only one I had any, desire to do. It totally resonated with me, being a landlord and someone who's looking to go into business for themselves, wanting something somewhat in the trades, right? We're not doing HVAC, we're not doing electrical or any of those kind of license required, services, but we're still doing things that really keep your property in tip top shape and keep you from experiencing any liability issues like a dryer vent fire or a slippage because you have moss growing all over your driveway or your walkways, things like that.
Right. Wow.
So
Okay. So just to be clear, this is a franchise. So you're not,
yes,
this isn't something you started from scratch. So you bought into, there's, I'm assuming there's a franchising fee, maybe that you got a special deal because you're a veteran, right? And so
correct.
you bought in, you had to pay a franchising fee. Did you then have to, and so that gives you credibility, notoriety, SOPs, standard operating procedures, right?
Exactly.
Probably some brand awareness and marketing to get you off the ground, right?
Yes. Yeah, exactly. The biggest reason I went towards a franchise location versus either starting something from scratch was because we knew, we are still a little bit risk averse. We have 3 kids to feed and everything like that. So I do still have my regular W-2 job. My wife runs the business day to day. I take care of what I can when I can, and things like that. But always making sure that we are taken care of on the home front as and making sure that we are
Oh,
stable.
okay. So
So
you got your franchise, you got your rentals, and you still got your W-2.
yes, correct.
Okay, let me talk about this because this is a huge. um, I want to give everybody like a realistic understanding of like this whole pursuit of passive income and financial freedom and all this kind of stuff. Because yes, active duty passive income, it's in our name. Got it. Um, just to be clear, like, just if this is the first time tuning in, I came up with the name A because it's a play on words, active duty, passive income. B, passive income is very much a real thing. It doesn't mean that you just get mailbox money after doing nothing. You have to actively manage your passive income assets, right? That produce you money in your sleep or regularly on repeat, right? You still have to build those assets or you still have to, take care of them, just like you're growing plants or you're taking care of your children or whatever the analogy you want to have. But it is not all the social media hype out there where it's like you put money somewhere and it just starts spitting out cash on the back end. The only true form of passive income maybe potentially like stock dividends or like royalties or maybe being a limited partner. But even then, you have to spend time vetting investors. You have to spend time vetting that company. You have to spend time learning how to write a song to then even have the opportunity of having any meaningful royalties off of that song. I'm just making up like, I don't know, the
Yeah.
Lion King example. People always talk about like, oh, that. So for example, I also like my transition process. I knew that if I like kept doing single family or even multifamily, it was going to take a while for me to be like, yo, I'm done. I'm like, I can go
Hmm.
sit on the couch. First of all, that's not me anytime soon anyway. But like, I knew that like, yes, I was probably going to need to still have some active income. Um, yes, I have passive income. That's great from you know, my commercial assets, or I also had like single family and all that. Anyway, and yes, actually disability a little bit. Like it was this blend of
Sure.
what actually, and my wife was also working. So me stepping out of the military was such a massive thing for me. Like it was so crazy that like in 2017 I was like, I'm going to make this a reality, and boom, in 2021 I'm out. Right? It was I stepped into the reserves, but basically out. but it was not just like this, oh, I have enough rentals, they're bringing me, everything. Like, because what got me there was me. I was very motivated, and so I wanted more beyond where I was at that time. That was just what helped my landing, be softer. It would help me, give me the confidence to step out. But like, we're still hustling because we want to build this faster, like our wealth, and at this age, we know that we're going to make a lot of mistakes, like I just told you about. So I just think that's a very good lesson. Like, chasing this financial freedom thing doesn't necessarily have to be, oh, you have X amount of rentals, it's producing you this money, you get to sit on the couch, right? It might be a blend of maybe a little bit of retirement income, maybe your spouse, partner, whoever is still working, or maybe you start an active business while also having passive assets, or it could be a blend of a lot of things. And so I just thank you for highlighting that, because I think that's important for everybody to hear.
Absolutely. It's we wouldn't be able to just live off of what we have built so far. And we slowed it down because of how the market was going a bit, with interest rates. We weren't quite ready. And when I say we, it's like my wife and I, thinking of this as a family, a family business that we want to give out to the kids later on, or bring them in more so.
Love that. Yeah.
um, weren't able to do that unless we brought in other people, and we just weren't kind of ready for that. We wanted to give one more shot at something that we could do our own for a little bit. So that's why we wanted to build an active arm of our family, to hopefully be able to provide that to purchase more properties, and maybe move to, the idea would be that we move to multifamily in the Austin area, because we would have another
Love
unfair
that.
advantage where we are a maintenance company. So we could, start our own property maintenance through that a lot easier than someone starting from full scratch. So
That's awesome.
that
That's awesome.
that
So,
is the next plan.
okay. So, building off of where you are right now, leveraging your uh, property maintenance company to allow you to really uh, minimize. Well, it's not only minimizing expenses, it's just you being able to truly mitigate risk in making some of those bigger investment decisions on like the larger apartment complexes. So
Absolutely.
that's awesome. And again, just again, guys, if you're listening and you're like, oh, you're calculating exactly what it would take to achieve financial freedom. Like, I'll tell you one thing, like in my calculations, I didn't anticipate inflation to be as high as it is. Like right now, if I did move back in
100%.
time, if I did move back at that 5, 6 years ago, with just like my rental cash flow and disability, I probably am making just the same amount I was then in the military. Not gonna lie,
Mhm.
like I could technically be financially free, but I now have 3 kids, similar to you. I now have my wife's mom and sister who fled the war in Ukraine and moved in
Oh
with us.
goodness.
Like and so as a result, like okay, and we moved to our dream, place. We live in St. Petersburg, Florida now. Actually, Austin is a second, like, close site. Like who knows? We might move there someday. I
Okay.
don't know. But like, so I'm like looking at, so my situation became a lot more expensive.
Yep.
Right. So it is kind of sometimes a moving target. We do want to maybe go out more than we used to, or I now see my children and I never had the perspective I have now, that I want to spoil them a lot more than I thought I would want to.
Yep.
So it's a whole different world than what your initial calculations might be, because per my initial calculations, I hit it. Per my new aspirations, goals, wants, dreams, not there yet. And I'll probably continue chasing it. And to a certain degree, that's part of the ride. That's the
Abs-
enjoyment.
Absolutely. I had very, very similar. Well, not everything in your story, just there, but my calculations on the amount of money we had to do to purchase what we thought could be that magic number, all those calculations were right. The rent prices that we thought were needed in order to hit that calculation, those were all correct. But you know what did not equate correctly was the interest rates and how fast they shot up and affected our PITI as we purchased, the last half of our spending spree, our buying spree, if you will, from about 2020 till 2023. So everything was on track to be very good, but the inflation and the higher interest rates, they slowed down that bottom line, to where, that's where we had to kind of pivot and look, okay, maybe we do need to look for something active. I still, this might be the way to be able to get out of the W-2 world, and have something solid to bring the kids in as we go, build the way we wanted to build, and then have additional profits to put into more real estate.
Yeah.
So,
Well, yeah, I mean, profits into real estate, like that's another thing. Like if you are in a position to where it's like, okay, you and your spouse are hustling as you're growing your investments, that'll just allow you to scale your investments more faster because you'll have more just income period to
exactly.
have to scale. Okay, so tracking that I just love that we're yeah, I think that's some of like the behind the scenes stuff that people really need to know and hear to like to understand what is the reality of all of this investing world, right? Um so you mentioned lawsuits, tenant issues. Um what is like just the number one thing that like, hey, do this to limit your liability with your rentals, or a couple of things?
Sure. The big one is dryer vents, and it's the biggest one.
I'm
That's
gonna
the
go check
easiest
mine
to
right
take
now.
care
I don't remember
of.
the
Do that yearly. You might be in the same Facebook groups I am. It's kind of the idea of just doing dryer vent cleaning as a business is kind of scammy in some areas. That's why, as a holistic maintenance company, it's a great service that we offer, but it's literally the biggest bang for the littlest amount of buck. Ours ranges anywhere from about 99 to $150 service. If you're looking at scale, you're definitely going to be able to negotiate. No matter where you're at in the market, you can negotiate a much better price. If let's say we quoted a multifamily of around 100 units, we're more at like 45 to $55 a dryer vent,
right, right,
and
right.
we'll go knock all those out, and severely bring that liability down. That stuff, that lint in there can go up like kindling at a bonfire
Yeah, like a
really
Christmas
fast.
tree.
Absolutely. So, besides that, the other one, from a safety standpoint, would definitely be looking out for any growth on your driveways that make algae mold that can get you have a slip hazard when it's raining, when it's wet. And then from a maintenance, like as in protecting your asset, keeping those windows clean, and making sure that they're not deteriorating, keeping your gutters clean so that the water flows correctly to keep your foundation safe. Those are two huge maintenance items from your perspective of protecting an asset.
Awesome. Thank you so much. I think a lot of our listeners are gonna be like, oh, gotta go check out those dryer vents.
There we
So that's awesome. Now I am aware of a story you might want to share today. And that was about, I think you called it like it goes full circle, right? Where you had
Yes,
what what didn't seem like a great situation, and you made lemonade out of it. So, would you mind
absolutely.
telling us like that? Because I think that's going to give us more glimpse into just like what you got to go through sometimes.
Sure thing. So, my portfolio is all single family. I think we have one duplex, and the rest are single family. And so, they're spread out across town a little bit. And the makeup of how they are managed is we have about half, a little less than half, that are managed by professional management, and they're relatively hands off. I talk to them a lot when I'm. They're very helpful in the acquisition process with confirming rent prices and giving really quick overhead uh, estimates on what a rehab would cost.
Right.
But
And this is in
otherwise,
Toledo, right? This is
in
all
Toledo,
Toledo.
yes,
Okay.
all in
Okay.
the Toledo area. But otherwise, they run those. I have three midterm rentals that I manage myself. They are range anywhere from 3 to 6 month stays, fully
Hmm.
furnished, and my dad helps manage a lot of that.
Sweet.
And then we have 10 that I am just the passive, I'll say the passive landlord with a healthcare company. And they take them and they furnish them themselves. They sometimes use them for maybe like hospice and things of that nature. And they manage them. But I am just the landlord. I take care of the mechanicals just like I would for any other long term tenant. Well, the
So
way
it's
I
not
met,
quite a triple net lease because
no,
because you still do the maintenance.
On the big things. If there's a leaky faucet, they're fixing the leaky faucet because they can't afford to have any sort of lag in that time. They have their own team. They're
Okay.
maintaining the lawn. They've painted properties. They have put on decks and porches all on their own just to build up the aesthetic. But a big mechanical is what I would take care of. A water
And this
heater.
is super long term?
Yes, we're going on probably 4 years with some of our leases.
Okay, but, like,
So
when you write the lease, how
uh,
long are the lease
two
terms?
it's been a 2-year term every time, and we've just gone
2-year
super
term.
slow building the relationship, and it's property by property. You know, if I have one coming up, coming up with a new lease, or if I'm purchasing a new property, I always run it by them first to see if they're interested. And well, the interesting part of the story is the way we met. I get a call one day and they say, "Hey, are you Trevor Mathena? Do you own such and such property?" I said, "Sure do. What's going on?" They're like, "Well, I'm trying to come see it." I said, "What do you mean? It's been leased for a month." It was like my second property ever. I leased it myself through Zillow and all that good stuff. And I said, "No, it's been leased." She goes, "I'm looking at your lease listing right here." I go, "Where at?" I find it's like on apartments.com. Sure enough, it was not me. And I was able to get
Dang.
it taken down very quickly. Apartments.com, shout out. They took it down in 5 minutes. They didn't give me any grief
Wow.
about it. And they were very good about that because that was there was most likely 2 to 3 people that Venmoed or Zelled this person $800.
Good night.
They were at a point where rentals were so scarce in Toledo that people were getting scammed by, you have to put a deposit down just to come view the property.
So the demand
It's
was so
terrible.
high that it was primed for scams.
Yes, absolutely. So I was ready. I wanted to scorch the earth to find this guy. I hated the fact that he was scamming people like that. So just to come back to
Good.
the story, so she calls me and I'm like, how did you find me? And she goes, well, we're a medical company, medical company, and we're trying to buy some property or to lease some properties that we can do Airbnbs for. We have these travel nurses.
And I'm sorry, can I interrupt you just for a
Yeah,
second? Because
sure.
I'm very interested in what you're talking about as well. So selfishly, I want to know what you're talking about. When you say medical company, what are we talking about?
Now they have they're like a small medical office. I don't know exactly the specialty. I would actually have to look that up.
Because you said like
But they
hospice earlier, or were you just speaking
yes.
in general
So
terms?
no, so they said they have part of the properties are furnished and they're like on Airbnb, but they utilize the fact that they have a network within the medical community to place travel nurses. There's a ton of travel nurses that come to the Toledo area.
Oh, okay, okay, okay.
So
So
that's kind of how
they
they split them.
got it. So they
Mhm.
came to you. And what is it? Is this a single family home, 3 bedroom, 2 bath kind of
Yes.
thing? Okay,
Yep.
so let's say it's a standard 3 bedroom, 2 bath, right? And they come to you and you're like, you know what? And they're like, okay, we like this because let's say all the bedrooms are similar size and the
Mhm.
arrangement of the bathrooms makes sense for co-living or whatever you want to call it, like where multiple people are in there, like house rent hacking, if you will, like I did in flight school. It's like me and four buddies, right? So, but what they do is they arbitrage this situation because they have the relationships with all the hospitals. And so
Exactly.
they know that people like you probably don't know how to advertise to the hospitals or how to tap into and find the right contact, but they know not only but they know not only one contact, they probably know all the networks. And so they go and they come to you, and let's say you're renting it out for $1,200. They're like, yo, we'll rent it out from you for 1350, an extra
Yep.
$150. So you're pumped, but they basically, it's kind of like Airbnb arbitrage, like you get something long term, then you
Exactly.
rent it out. Or now they're doing midterm renting this out to the people that are probably paying them, I don't know, whatever it is, like 800 a room or whatever. So
Mhm.
they're like on a 3 bedroom, they're definitely making margins. However, are they giving you, is there any like profit sharing if they do better? No, it's just flat
No,
both
it's
ways. Okay.
and they've I mean, my original goal was to be as passive as possible, and
Love
they
that.
make
Yeah.
that happen, right? That I get a call every once in a while, "Hey, this water heater's going out," you know, I they have their own team, but they just have me kind of assess the situation, make sure nothing's going on. We built trust over a number of years that neither of us are trying to get one over on the other or anything like
Are they
that.
only in
And
Toledo? Where can I find these people?
they are, as far as I know, they're only in Toledo. I'm almost I would venture to say I might be the only landlord that they're working with as well. Not, but I could be wrong on that. So
Interesting, because
yes,
I have so my maintenance and property management team in just northeast of Indiana or Indianapolis. They've been foaming at the mouth at all like the 50, 60 grand dilapidated 3-bedroom, 2 baths that they could renovate. Burr out there, they're
hmm
like, hey, like, yeah, we get multifamily, but these are just ripe for the picking here. And I'm like, gosh, and like, so I'm trying not to get distracted. I'm really big on focus, right? But I'm like, gosh,
sure,
if there is a way to where I would not have to, where I could make it passive, I could give my maintenance team this constant revolving door of awesome jobs to do so they can make more money, make more revenue, grow their company.
sure.
uh you know and on the back end, like I'm the money guy, the capital guy, and also the person that connects the dots with a company like what you're saying. We almost did that with we acquired, it was actually like a 6-bedroom single family home, like very
Oh
crazy
gosh.
layout. Yeah, but it wasn't that big. It's just the layout was like there's like this one. It was a kind of like a split second, almost third floor, where it was like a hallway and like
Okay.
4 bedrooms. It was just a weird house, but so I think a rehab uh, company ended up buying it, but similar. But we had buyers or potential buyers that were thinking of the same thing. They're like, hey, we want this to be rented out by multiple people. So like rehab, it might be drug rehab where you have where
Sure.
they're transient. They live there for 6 months during the rehab process, then they're out. Or like you said, traveling nurses. But that's really really cool. It also it's just another op. It's just interesting. Like you can make money in the margins if you solve two sides of the problem, right?
Oh yeah, neither of us look at it as some sort of zero sum game. We
Right.
work together, property by property, and just keep building that trust. And it was very impressive. For one, the reason I pushed to even work with them was, she called me to say, "Hey, I want to take a look at this property that had already been leased and was basically this scam listing." And I said, "That's not me." So there, right off the bat, we had a little bit of like, is this another layer to the scam? So, we had to work through that. And,
Wow.
3 years later, we have, 7 to 10 properties that were leased together. And then just at the end of the year, that property that was subject to the scam listing, the tenants that I had first placed, they left. And so I said, "Hey, you guys still
It's
interested
available.
in that one?" And sure enough, they took it. So, we've come full
Wow.
circle now. So that first property that kicked everything off, this great relationship to help me with my goals, help them with their goals. Now we've kind of closed that loop for the time being. Hopefully, we can do more in the future.
That
But
is awesome. I think you gave our listeners a lot of potential really cool ideas. Guys, I mean, this is one of the things where how should I put it? Like for example, I just hopefully, in the next couple of days will be under contract officially. I have the offer accepted on a large apartment complex, right? The only reason I was able to acquire this was because I was able to offer the seller not only confidence of closing that I was actually going to buy it, but a price that he really liked. And the reason I was able to do that was because I had in house maintenance and in house management, essentially, which allowed me to lower costs, which allowed me to pay more because I knew that I could still get the returns I wanted, even if I would overpay relative to what other people wanted to pay. In your situation, like you're you're able to so these people that are leasing from you, right, they're able to offer you a higher rent price. So it's not that you're lowering expenses, but when you're looking at a property, you're probably on your your analysis sheet, you're putting down that you're going to be able to rent it for higher, I presume, than what the market rent is, because you have an awesome relationship with these people who can probably afford a little bit more because just A, the relationship, B, the type of business they're going to be running inside it, all that kind of stuff. So you basically, your aperture for what you can acquire is probably larger than the typical investor in Toledo who's just looking to rent it out market rate, right?
Yes. Plus, the other option, the other wrinkle is near and dear to my heart. The maintenance. They are cleaning these properties because they're on Airbnb, so they're in there multiple times a month, potentially multiple, at least a couple times a year,
Right.
cleaning the property, making sure it's upkept. They're not letting a drippy faucet go to the cabinet and rot out the bottom of your cabinet, all that good stuff. So they take maintenance seriously because they have to provide a good product to their customers. And so that's a win-win. They are helping me to maintain my asset all while paying at or above market, and make allowing that set of properties to be very passive.
Okay, so as far as so really it sounds like this is Airbnb arbitrage more so than even like the medical side of things. So yes, they work with nurses. It sounds like maybe traveling nurses, traveling doctors, but the reality is it's really kind of like it's really just Airbnb. They're long-term releasing it
Yes.
from you, short-term leasing it on Airbnb or through all their medical contacts, and they're making the spread in between. It's kind of like it honestly, it's kind of like a property management company, but they're
Sure.
making, probably because of the business model, making a higher margin than, or making more than just, let's say, 8 or 10% management fee, right?
I think so. I mean, they've paid on time for going on 3 years across multiple properties.
Yeah, they're doing
Um,
well.
it's I think they're doing okay, and they're paying all the utilities and all that good stuff because they got to stay on, right? They need to
Okay.
stay on for their customers. So
So thank you. Okay. So that actually provided an extra layer of clarity. And let me just plug
sure.
something for everybody. So if you are interested in doing that, like let's say you want to find the Trevors of the world, rent out their properties and then put it on Airbnb, or rent it out as a midterm rental to traveling nurses and doctors and just make the spread in between, which I hope you hear what I'm saying here. That means you do not even need a down payment. You can acquire these passive assets. You might not own it. Your name might not be on the title or deed, but you're still making that cash flow. You might be able to do something like that and start learning this business and making more income so then you can have down payments and you can have money for your own properties, right? Your own investments. It's called Airbnb arbitrage. And actually, if you there's an opportunity to acquire or to buy our military real estate short-term rental academy. Hey guys, you all know that we're an education community, right? This is what we do. There's a lot of time. I mean, I think it's like over eight, definitely over 20 hours, maybe with everything else close to 80 hours of just raw content, step by step, how to do exactly that. If you want to learn the Airbnb game, or if you want to acquire long term rentals and sublease them out short term or midterm and make that spread in between, definitely check us out at activedutypassiveincome.com. We have our mentorship program with, like, it's like a small subscription, but you get access to the academy, and then you get access, then you can acquire the other academy for short-term rentals if you're also interested. So I just wanted to make sure everybody knows, like, after they're listening to this, that they're like, wow, that sounds like the greatest thing since sliced bread. How do I do the things Trevor does? Or how do I do the things that Trevor's tenants do? If you don't know already, just visit our website. Trevor, you are actually just like so down to earth and inspiring, and you're helping me break it down Barney style, right? So I really,
There
really,
we
really
go.
appreciate that. Because we're trying to keep it like super valuable for all walks of the real estate experience levels, but also just fun, entertaining, and simple. So, what else do you want to like? I don't know. Maybe you want to tell somebody who's just starting out, or maybe you just have a saved round. Maybe you want to talk a little bit more about your awesome Home Smiles company. I'll let you have the parting word, and then we're going to wrap it up and say goodbye.
Sure, no problem. I would say that it may sound like the story is a bit chaotic with things that were going on. I will tell you, just like you said, Markian, is that I try to maintain like laser focus, but also keeping one eye open for anything to pounce on, anything to take advantage of, and be able to move a little bit as needed. Because the plan you started with a couple years down the road might not still be viable. So you have to be able to be working that a little bit and just shift a little bit and reset that focus on something else. And then, of course, keep your properties maintained, keep yourself out of the liability trouble. And if you're in Austin, call me, Home Smiles Austin. We service the entire area.
That's awesome, Trevor. Thank you so much. Thank you for sharing your story. Hey, everybody, as always, like and subscribe, as the cool kids say. If nothing else, please share this episode with anybody and everybody that you think would benefit from this on your own social medias. We have relaunched the podcast as of a few episodes now, and we want to make sure that we continue on our mission of impacting 3 million military families in the next 10 years. Thank you for tuning in. Thank you once again, Trevor. See you guys later. See you in the next episode. Bye.
Take care.